Hello, everybody. Welcome back to session 2 of Helping Chloe. Helping Chloe is a mini session that we've got happening, a mini series for the next 6 weeks, well, 5 more weeks, where we spend an hour working with Chloe, one of ProTrader's members that have been with us for about a year. Basically pulling apart her history and with her past 12 months of trading history, looking at her reviewing her journal, reviewing her trading style, and seeing how we can best get her to the next stage of her trading, which is getting a funded prop firm account. Good morning, Chloe. How are you this morning?
Yeah, good, thanks. Excited to go into the trades.
Good. It's always exciting, right? Last week we had a bit of a broader overview of kind of where you're at. The key takeaway, at least that was for me, and maybe some of you guys had different takeaways, but was that key pivotal turning point from daily power hour from May this year. Right. Now that's not to say that, it's not saying daily power hour. It's not an opportunity to plug daily power hour, but it was quite clear that every month prior to that, you were in more than 5% in the red each month. That month, it was not bad, bit of a break even. But then after that is really where things started to change. It was also around where you started focusing more on the pip snatcher and hyper trade rather than the trend chaser. The data, if you've got we're going to be going pretty heavy and deep into your trading journal. So if you could have that up and ready and available for us. But the main thing was we saw right at the end of last session that hyper trade plus pip snatcher, so those two, because of the same strategy, the only difference is the trade management and the profit targets. Those two combined, you were actually running in profit. You were actually trading profitably. It was just that trend chaser that had been diminishing your returns, I suppose. So to really focus and refine the pip snatcher and hyper trade, work with your strengths. If you've got a strategy that's working for you, it's much easier to improve the subtleties of an already profitable strategy, or they're all profitable strategies, but a strategy that you're already trading profitably to improve the profitability of one of them is actually easier than trying to start a whole new strategy from scratch. Try to learn that profitably. The other key takeaway I think that we saw is that your hyper trades were quite profitable, and your pip snatches were, I think, on their own, were less than a 50% strike rate, meaning that the key takeaway from last week's session was be more stringent with your pip snatcher entry criteria. It's easy to say, but how would that look? That would mean that what you deemed a hyper trade, right, is something that, well, you take the hyper trade on and it would go on to be profitable, would be a winning strategy. But what you deemed a pip snatcher was like a trade that wasn't good enough to be a hyper, but it's passable as a pip snatcher, so we'll take it as a pip snatcher. That was the vibe that I got, right? And then that ended up being kind of towing the line and bringing your results down a little bit. So whatever your criteria are, like if you weighted, okay, everything is I don't know exactly how you analyze the difference between a pip snatcher and a hyper trade, but lean more towards every trade that you'll take has to be of hyper trade quality. Every pip snatcher that you take, whether you take it as a pip snatcher or a hyper, again, the only difference is the trade management. But if it doesn't qualify to be a hyper, then it doesn't qualify to be a pip snatcher. Is something that you could maybe a little bit of a reminder, a sticky note that you could have. I'm kind of just spitballing food for thought out there. Um, yeah, that was kind of my takeaway that I left. But last session was about you primarily. What was your key takeaway? Did you have any one or more things?
Yeah, my one was it was about the same, but I guess what I took away from it was a bit different. So it was the same about the pip snatchers like letting me down and the hyper trades being better. Um, but then it was more about like why, and why was because when I look at the hyper, I look at the daily trends, and that's actually one thing I'd been really like neglecting, and I'd been like purely looking at DDP based on the last few candles. And actually, when I analyze it for a hyper, I analyze the trend, and if I did that, then I'd do better on everything else. So I've
Mm.
added that into my plan now, and yeah, I'm feeling a bit better. There's one trade I have an entry order on today. But just what you said there made me think, oh no. What have I done wrong already?
That's
So I was like, oh, it's not really a hyper, but it's hyper quality, but it is a pip snatcher.
good. Yeah, that's your obviously of the fixed definitions and criteria is that a pip snatcher is naturally not going to be as good as a hyper trade. So here we go. I'm kind of backpedaling here. But your definition of what a hyper trade was is, yeah, is it going to be carried 2 or 3 days from here? That is a supporting confluence factor to your DDP. I know we had somebody in the room here ask in particular. I encouraged them to go and ask it in the Q&A support channel, all right? But they didn't. They messaged me privately and said, "Hey, Luke, you were talking about DDPs. I didn't realize it needed to be 2 or 3 days that you're predicting where price is going to go next." I asked them to go post that in the chat and I'll answer it. They didn't, so I didn't answer it. But on the weekly market forecast, I did. It's a supporting confluence factor, right? All we care about is what is going to happen in the next day. Like the objective is the daily direction prediction, what's happening this day. And then our sub-objective of that is what's going to happen inside the strategy is going to reach the profit target of, say, the pip snatcher, which quite often is the recent high or the recent low. But it's chunking down. It's starting right from the top, which the biggest thing is the daily trend. Right? Is it favorable or is it unfavorable? Does it need to be favorable? No, it doesn't need to be. It could be part of a daily pullback. That's fine as well. It's not as good. We'd always prefer it to be favorable. And when you've got a clear daily trend and price is on its way up to a recent high on the daily time frame that formed 2 weeks earlier, and it's still got 3 or 4 candles to reach that high. Oh, excellent. It's got a lot of gusto. It's got a lot of momentum up there, and that's going to certainly support the today's DDP. If we think it's going to be, this is what I covered, because I know that most of you, probably some of you maybe didn't watch the weekly market forecast. But the key thing is, if we think it's going to be 200 pips further or higher than what it is, in 4 or 5 days from now, well, the likelihood of that it's going to head 20 pips in favor today is relatively, it's higher. It's a higher likelihood than just yesterday being a bullish candle, right? That's obviously one supporting element. But if our longer term or midterm bias is that, our weekly direction prediction per se, if that is, it's going to be 200 pips higher, then your daily direction prediction, to be 20 pips is not unreasonable to think that. Versus if we think, okay, in the next week or two, it's probably going to fall 200 pips, you can still have a daily direction prediction is up. But there's a strong negative there, right? Let's say if that is in a complex pullback, or not a complex pullback, let's say it's counter trend that you're trading, and it's kind of nearing that 50 EMA or that support level. I know many of you who I can do the charts in my head. I know most of you right now are just seeing me going through my thought process. If you're new here and you can't see charts in your head when I'm visualizing and talking about these things, just bear with me, right? So yeah, if you're in a pullback that you're like, okay, there's maybe another 50 pips left in this before it hits the support level, the 50 EMA, the day, whatever it is, 2050 EMA zone. There's some chunk of stuff around there. We only need 20 pips, right? And there's about 50 pips before it starts finding support. You can still have a DDP down, right? But where do you think price is going to go in 5 days? It's probably going to go up and reach recent highs. So it's going to have a little bit more down and then more in that favor. So that's a bit of a we take all of this into consideration when figuring out what our daily direction prediction is for today. Is that making sense? I know I explained the same thing in about 3 different ways, but that's how I tend to do things, so people follow along. Cool. That was to answer somebody else's question, but also perhaps to help support that as well, Chloe. So let's bring up your charts, or let's bring up either the setup you looked at today. Let's break into that one first, so we can see and then we'll go through and we'll do a big analysis of all your trades. This one's going to be quite is what we call advanced self-review, guys. So I mean, it would be called advanced self-review. This is going to be I'm going to be supporting her in her advanced self-review. It's not necessarily self because I'm here supporting her, but this is what you would do on your own. So the process of what we do with this kind of journal review and such is the same as what you would do at the end of each quarter, or at the end of each month or each quarter. I'm going to be keeping notes as we go. Bringing up my notepad. So yeah, simulate and replicate what we're going to be doing today. But first, we'll look at this trade here. that we place an entry order on, still pending. Give us your analysis. If this was your weekly market forecast or it was your daily power hour, you're breaking down the trade, you're teaching us why you took it. Give us compelling reasons here.
Okay. So the daily is in like a quite a clean uptrend. This was like a bit of a double top, but then it's been, higher lows, higher lows. This is going up. It's not quite RSI overbought yet. And then because it's quite a clean trend, looking at like the fib extension, it still has like a lot of room to even hit one. So I looked like a few USD pairs and a few NZ pairs today. And it took me a while to like go through and think about each one. But this is the one I kind of ended up on. So this candle, it had like a stall at this level, and then it had its initial break out and closed above. But now it's had another one, which is sort of an even bigger momentum candle here. And now it's like definitely closed above these levels. What was like my mild concern, I'll just put a level on here, is I'd say, it's above here, above here, above here. But then there are two touches here. But in my plan, sort of at the moment from what I've went through and seen is like it is an SR level for sure. But the close, there's no sort of wick to cross, like it's a fully kind of momentum close. So I was quite happy with it. In the 1 hour on the 1 hour chart, the 1 hour EMA is held pretty well. Like I'm happy with that being really consistent. This is such a clean run up and trends. The 1 hour 50 EMA is lining up nicely with the daily pivot line compared to some of the other ones as well. And the pullback is like just so clean, and it's already sort of showing it's forming. Like it's not consolidation, it's like a big break and it's coming back slowly, but it's already showing it's not really going to be a 4 hour against at this point. So this is what I'm quite happy with it.
Mm-hmm. The one concern for great analysis, great analysis. Thank you. Good explanation. You could take my job if I ever have a sick day. Uh, that major, if you go back to the double top that forms right on resistance level, like having a look at that, that's two what I'd call like extreme rejections.
Yeah.
Right, that's and then you can go further back, and when you go further back, now we've got a whole back where you were was perfect. Now you can see there's maybe at least five. Now you don't necessarily need to go this far back for everybody on the call, right? But when we drew in that level and you went back to those first rejections, this is the last time price reached this level, right? So when looking for quality resistance, it's not necessarily weighted towards how recent it was, because we can see this is back in 2023, right? Which is not actually that long ago. It was about a year ago. You're like, well, is it more weighty if it's 3 months ago or 1 month ago? And I'd say it's more weighty. When was the last time price was at this level, right? Had it responded to it? Had it kind of flapped around and gone broken it before and come back and then retested it? But like these two, if you took a little mental snapshot of those and then scroll back to where your position is, and they were slapped right where those previous two highs are, that didn't reach the levels. No, where you were. So like there's last, yeah. So where if you look the high just to the left of your cursor and the high just to the right of your cursor, yep, there and there. If those two highs from way back there were right there, you'd say, bloody hell, I wouldn't take that. It just keeps attacking that same resistance level, right? But uh, it's not any more or less weighty. It's how, because it's further back. If anything, I'd say it's almost more trappy because like novice traders, unfortunately, are they're the food, they're the shark bait for the big fish, right? And many traders, the fact that you went back and identified, you actually saw that resistance level, Really good. Excellent job, right? Most traders in their first year wouldn't do that. And that means that if it's not seen by the novice trader, it's probably exactly what's going to happen. And then the novice trader would go and they'd see, oh, I traded straight through that resistance level. You look at things after the fact, and then you say, how was I so stupid? Right. But you've done a great job here seeing something before the fact. And it's a significant, it's firstly, is it relevant? And yes, it is relevant. You've identified that's why you drew in the level, because it's relevant. Now the conversation is how substantial is it? How significant is that? And I would say much more significant than you think. The fact that it's a double top from back there, one right after the other. It's not like there's one touch and then there was many highs and many lows that formed and then it came back and revisited it for another touch. It was bang, bang. And then price went on for an irrelevant amount of time. Price is now back at that level, which last time, like of the last two, I know it's going to sound obvious for me to say this, but it's kind of the way that we look at it. Of the last two times price visited this level, 100% of the time, it broke away from it quite aggressively. So if we go back to where it was, we'll see both of those hits fell. They came from quite low, ran straight up. Look at the momentum that approached that level. I'm getting a little bit granular here. If you're still in your first couple months, this is just know that it is a resistance level. There's extra weighting that we can put on this. We had freaking massive momentum, especially on that. Well, both on the first and second rejection there. This price shot up. It was a speeding train. We had a lot of bullish pressure, but then at this level, it was like hitting a steel wall, 6 foot steel wall. You see that? It just ran up, hit that, fell away. That's more than price just kind of trundling up, giving a little kiss and then falling away. So that means that and you identify what you said before was absolutely correct. You had momentum from that most recent bullish engulfing candle when you were forming your DDP, showing, okay, well, I had big momentum into this level. Chance are it's probably going to wick, or it's going to like at least maybe push a day or two, maybe get some deceleration. We can get in and out of a trade within the next day or two before it breaks away. This is a textbook case to say that's not the case. This level is such a 6 foot steel wall that this doesn't give a shit how much bullish momentum there is. That speeding train there hit that and it immediately fell away from it. So we didn't have the luxury of an extra day or two or three. And history doesn't always repeat exactly, but it rhymes, as the old saying goes. So that's the big flags for me. Major one is that very well respected, stopped price dead in its tracks, and those were the last times price were at this level. And then when you go a little bit further back from there, we can even quantify to say that, okay, look, each time. So I'd say so even if you stay right there, if we go back, so we can also see the two highs. If we can do that, yeah. There we go. So we can see from got working from right to left, where there was the other right. Yeah, there we go. So we go that stop the speeding bullet, stop the speeding train right there with the 6 foot steel wall. 1, 2, and then as we go further left to where it reached that price again, where it did break it on the way down, but we can see that responded very strongly. So you guys will hear when I'm saying rejection, 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 rejection. Obviously, that gives it a plus point. A break gives it like a minus point. Like if price just blew on past it and just ignored their level, well, then that's like okay, that's a reason to believe that maybe the level's not that strong. But a response. So price responded to it on the way down. Yes, it did break it, but I'm not going to give that a negative point because that almost helped, right? It did break it, but it didn't blow past it. So there's like I'm measuring each time price respond or each time price reaches a level, it either rejected, which is a +1 to its strength. It either responded to it, which is just a 0, doesn't give it a positive or a negative, or it ignored it, which gives it a -1. Right? This is I've got a little bit more mathematical with quantifying SR levels because a lot of people ask me, well, how many rejections do you need? And it's not just as simple as, 3, because you could go back on any level. And if you go back and you look at the last 20 times price responded, I'm sure 3 out of 20, it's going to have responded to a level. You can chuck in a level anywhere on there. So it's more of a percentage. And we can see, so from we've got the two from the 6 foot steel wall, and then we've got a response there, not a positive or a negative, but we can see it was still in play. That one there was a solid rejection. So that's another one. So that's 3 of 4 without a negative. That's another one there. That's 4 of 4. That one there, on the way up, it did respond as well. See how we just got like the one wick. So it did where it did break it. That responded. It was a little bit of a weaker response. We could give that a -1 if we wanted to, but that's certainly a response that we saw. Then that one there was a stone cold dead in its tracks, like that steel wall, and then likewise the one to the left of that as well. So I'd say that's 6 really bloody clear rejections, and the 2 times it did break, it still responded very well to it. There was no sign to show that it's no longer in play. So I'd say 1, 2, 3, 4, 5, 6. 6 out of 8 times price just approached this level, it was very clearly rejected, and the 2 times that it did break, obviously broke to the upside and then broke back to the downside. Both of them were it responded to it. There was no sign to show that this level is no longer in play. And then we could even go further back again from, and you could say, without moving too far, no, for just to like those couple of candles to the left of the most recent one that we counted. We only counted the last 8, but we can see the same thing. We're broken, retested again, and so on. So yeah, exactly where your cursor is. There was another rejection, I can't see a single time where price didn't at least respond to the level or reject it. So that's really that's the comprehensive way of how we really quantify support and resistance. It's like when you put it like that, like if this was on a data sheet, like if you're looking at a Google Sheet document, and it just said, level relevant. Yes, we can see we've identified it. I think many of you would have identified, like Rich put it in the chat here, resistance level. We all saw that there's a resistance level there. And most of you can do that, but it's about quantifying it. That's where I find it trips folks up. But when we already know it's a relevant level, we put it in a data sheet like this, and it was like the last 6 out of 8 times, very strong rejections, and the other 2 were responses. That's more than enough. And if we went back even further, we would have seen even more. It was still, could have said 10, probably 8 out of 10 or 7 out of 10 active rejections. So if any, I'm pretty confident that if any of you read that on a data sheet, you'd say, hell no, am I trading into that? But there's something that happens on the chart, so we get a little bit wonky and a bit biased. So that trade, for that reason, Chloe, I'd say that's probably a no, and I bet that's the one that wouldn't meet your hyper trade criteria because, we're just trying to squeeze the last little bit. There is a resistance level there, but I'm hoping that, cross my fingers, that maybe we'll get a wick that forms, that wicks my way to profit target. You don't want to be banking on it wicking your way to profit target. Those are the ones that'll end up, chewing you up. Now, this resistance level, if we were trading into it, or if price hadn't reached that, and that's the concept of the milkman's already made his delivery. In this case, the milkman already has made his delivery, and the wick has actually gone and exceeded it a little bit. So it kind of looks very similar to the second to last rejection. If you go ahead and just have a look at that one, we can see. Going to go back a little bit further. The second to last rejection of that one. So that one there, see how we had that little high test candle that formed? Second to last rejection of our steel wall. So we just go to the left. Yep. Nope. Right there. There you go. So you can see how price ran of the level that we're talking about, the steel wall. So a bit higher up. Move your cursor. Yeah. Oh, I'm looking at, yeah, exactly right there. Maybe you're looking at, I was just following your crosshair around.
Oh, sorry.
So that's where it's already done that little high test and it fell away really aggressively. So, I'm seeing that's a like, is that exactly going to happen? I don't want any of you messaging me tomorrow being like, oh, Luke, look at that. It did go on and exceed Chloe's profit target. Ha ha, she was right. You were wrong. Of course they're going to happen. But I'm thinking 50-50 from where price is now looking at this. Man, it's 50-50 if it's going to, I think it's more likely I'm 80% sure we're going to see some bearish, price is going to respond to this. We're going to at least get 1 or 2 days of bearish candles, whether that happens tomorrow or the next day, or, maybe we do get the little arc of deceleration that Chloe's hoping for, and maybe there would be a profit target banked in there. But I'm going to say the chance of deceleration, of it falling today or going exceeding Chloe's profit target today, that's 50-50. And that's not what we want. So my DDP on this is literally 50-50. the way that the current candle is developing, which we don't really take that too much into consideration, but the way of the current candle's development, I'd say it's probably actually 60% likely that this is going to form a bearish candle and price is just going to continue to fall from here because price has already reached this level, right? It's not on its way up to it. Very different conversation if, let's go down to the 1 hour now. So see where her level is. It has run up and it has just slightly exceeded it. Chloe, do you ever use, you're on a Windows by the look of it, aren't you? Do you ever use, is it Alt click? Do you ever use that to maximize?
I'm on a Mac. This is
Oh,
just
you
the
are? Okay. Do you ever use Option click?
Um,
That's really good. If you Option click into the black space, there you go.
oh yeah, no.
Saves
Oh
you
yeah,
having it.
no,
Because
I
I used to
do.
do the thing moving the charts around like this, and then you realize they all end up getting wonky. So that's that level that was in question. The was it, or actually is that alert level, or did you set that alert for something else?
No, that's the alert. I moved out of the
Okay.
way.
If you go
There's
to Option click in the black space again, Option
oh
regular
yeah,
click.
sorry, I was clicking control.
Yeah. And then if you were to take that resistance level from the daily and then on the daily time frame, is it this is it's a different level, right?
It's just this one level.
Oh, it is the same level. Okay,
Yeah.
right. Right. Okay, I see. So yeah, price is already, so if you maximize that screen again, if price had say only got to, now I gather that I grant that this would have obviously invalidated the setup based on where the pivot lines are, the 50 EMA and all that. But see where, let's see exactly 50% of the way through the recent run. There we go. Yeah, exactly there. If that high test candle, like, maybe price would have wanted to fall from that high test candle. If price had turned around from there, if you move your cursor to the peak of the journey, the tip of the wick of that high test candle, the one that we just
Oh, this
identified. Yep. If it was there, see the distance, guys. I want everybody to see that there is still some room up to that resistance level. If price had pulled back there, presented an entry, wouldn't have in the way that things are drawn now. But let's just say that the price had only got to that high and then it pulled back, you had an entry order set, bang, on the way up to that resistance level, fantastic position. Price is on its way to resistance. Trading towards resistance, whether it be dynamic support or resistance like the EMAs or something that's horizontal or even a trend line based kind of um, resistance level, price is often magnetized to these levels. But it's like, what is magnetize? Once it reaches that level, it becomes repellent because just understanding market mechanics, you've got the buyers, the bulls that are driving price up to that level, that are holding their long positions, likely with a profit target at that resistance level. Once you reach that resistance level, why you see the price pull away from it, for two reasons. You've got the bulls that are closing their long positions, which then to rebalance that, they become short, they become bears, and then close out and they reconcile their position. So you see this. This is when you see those little minor like bounces. That's often profit taking. It's not necessarily bears entering the market. It's just the bulls exiting. That'll create a little bounce. If it's a major level like this one is, and this is what our fear is of Chloe's position here, is that not only will you have the bulls that are on the way up here because we've now reached the level. So there's the distinction that I'm making here. Price from where her cursor is up to that resistance level, price is on the way there. Good. So that means that the bulls who have profit target at that level are going to still keep holding on. They're going to keep buying, keep holding. Away we go. After we reach that level, profit taking happens. They close out the positions. Great. You don't have any your bullish counterparts, your comrades, because you're about to take a bullish position, long position, they've already exited and they've taken profit. They're happy. They're off drinking coconuts at the beach. By the time you're entering a position, already too late. The resistance level has already been hit. So when I'm talking about the milkman's already made his delivery, he's off to go to a different neighborhood now, right? The trade's already been done. The profit taking's already been has already happened. And then here's the other element to it, right? Is so price can pull back to your entry price, great, but is price being driven into and beyond your entry price? And what will determine that is the amount of bears that are entering positions here. And if there's more, if there's a tsunami of bears and there's only a wave of bulls, because this is quite likely there's not a terrible position. If you were to take this setup here, you wouldn't be the only person, right? There are going to be other traders out there that see a similar thing, that see a pivot line, that see the 50 EMA, not just in pro traders community, right? The concepts that we teach work, and they're fairly universal. So there'd be similar variants of other traders trading the same way as what we are. Now that's when it becomes a trap, because we can see the wave of bears that are coming in. They're like, oh, you beauty, look at this resistance level that probably the novices didn't see, because we've got these significant 6 out of 8 of the last times price approached this level were absolutely rejected away from it. So this is where you'd have the cascading effect, or the domino effect here, of price would pull back, hit your pivot line, right? Bounce a little bit, get 20% of the way to your profit target. It would start like, oh, nice, rubbing our hands together. We got some, it's a favorable position, because the tsunami has only just begun. You know how it sucks the tide out and it does the whole thing. It takes time to spool up, and you got all the fish that are flailing around on the beach. You got the lady, people coming and picking up the fish. What's going on? That's because there's a fucking tsunami about to come, right? Um, Anybody understands how tsunamis work, right? So that's what happens there. The tide sucked in. There's a little wave of bulls that enter the market, which is yourself and other people, which have entered this trap position. Um, and then gets a little bit of hope. And then, of course, the tsunami comes and boof, goes and blasts your stop loss. Right. So that's what I kind of see when I didn't always see the charts this way. Trust me, I was not a naturally gifted trader. But it's kind of the story we can tell. And when you see that happening, and again, the likelihood of this happening is, I'm going to say 65%, right, of exactly play by play by play by play. I'm not a fan of sports, but I'm more of a, I always say I'm a bit more of a participant rather than a spectator. Um, that's why I don't really like sports or watching them. But the satisfaction when you make a call like what I just did, maybe I'm right, maybe I'm wrong, just like somebody who's watches sports on TV. But that's the reason why, the long-winded, caffeinated Luke reason why we wouldn't take that position. But if where your cursor was, price had pulled back, right? The tsunami that had been carrying us all the way from the 18th, 19th, 20th, 23rd, 24th, these days leading up to this point, the tsunami was on its way to that resistance level, and it hasn't reached that resistance level yet. And that's where this accumulation of bulls had happened along the way, even on the runs of the pullbacks. I guarantee there are traders here that has been carrying this long position from the 18th, from the 19th, with an ultimate profit target of that resistance level, because it's a significant enough level to take profit at. So you're entering post everybody else or your comrades already having exited. Versus if where your cursor is now, if there's a pullback, it's just those little breathing oscillations in the market, it would have been an excellent entry price to get in, somewhere around there where your cursor is now, if it was still on the way to that level. But it's no longer on the way to that level. It's finished. The tsunami is gone. The tsunami in favor has subsided now.
Yeah, my entry order's gone.
Just obliterated it. There you go. No, but really, really good stuff. So this is kind of, you wouldn't have taken this as a hyper trade, right? Because there's a resistance level that's there, and this is kind of from last week. What I thought, this is probably the exact style of setup that may have been. I mean, we can dive into that deeper now. We've only got 25 minutes. I realize that time's a little bit. We may go another 5 or 10 minutes over. But if you could bring up your journal, let's see what other. Wow, that's a beautiful background.
Yeah.
Life goals, like desktop background goals. Anyway.
Do you want to look at?
Let's work in order of, because we're going to be doing this weekly. Let's maybe begin in August. See what August's 19 trades, right? What have we got here? Cool. We got 44 strike rate. Reward risk -3. So we're always going to be looking at the reward risk ratio, guys. The profit percentage, obviously that's important, but when it comes to specific trade performance, we're always looking at reward risk ratio. Profit percentage is when there's something that could be going on with a lot sizing or a little bit of slippage here and there and so on. But we're looking at specifically reward risk. So if you take a 1-to-1 trade and you lose one, you're down 1 RR. For the sake of strategy and trading performance. The other things, the profit percentages, there's a position sizing. So you got 19 trades here, 8 wins, 10 losses, one break even with a profit factor ratio of 0.67, 2/3. So that is because you would have taken, I guess, some partial wins here, which is not what we want. Um, Strike rate 44, because yeah, that profit factor ratio should be better unless you've been taking partial wins and you've been fondling positions. Um,
It might be like news close. I'm not like
could
I
be.
don't close early, but I'd close before news
Right.
or
Okay.
Devil's Hour on a Friday.
Yeah, beauty. No worries at all then. Okay, let's go to, and these are all just to check, we can check it again if we'd like, but is these 100% of these pip snatches and hyper trades? Or what's the
Yeah,
breakdown?
I think they're all pip snatchers
Right, that makes it easy.
this month. Oh no, one hyper trade.
One hyper, that juicy morsel that ended up being a winner. And you can see here on that hyper that you got, it was, your result was just under one, it was just under one
Mhm.
anyway on the reward risk or profit. So that was it was a hyper trade. You went in with the intention of a hyper trade, and you exited at about what you would have if it were a pip snatcher, right? That's how many hyper trades should be. Guys, there's nothing wrong with taking a hyper trade, getting to the 1% and saying, you know what? I actually prefer this as a pip snatcher. I'm going to exit here at the 1%. That's really good. That is one option that you're allowed to fondle the trade, right? Any hyper you go into, the sole objective of the hyper is I want to bank under with no matter what the cost, I want to bank more on this than what I would if it were a pip snatcher. That's the only objective of the hyper. It's just a more profitable version of a pip snatcher. You really want to avoid entering a hyper that runs into like 1.5% running profit, pulls back and takes you out at like 0.5 or zero point 0.6 or zero point 0.8, because that means that the pip snatcher would have been a better option. You would have been out at one. So I really, if I get to 1.2, 1.3, I'm locking in that 1%. It's like you can pull back now if you want, you sucker. You can do all you want. At least I've already got my pip snatcher out of it. If it's a hyper trade that banks 1 to 1, like almost all of your hyper trades should bank at least 1% profit, 1% or more, or never reach the 1% profit mark. That makes sense. If it ever reaches and exceeds 1% and you don't bank 1%, that is a big red cross, because that means you should have gone with the pip snatcher. Or not you should have gone with the pip snatcher. You should have managed more aggressively, because the pip snatcher would have been better. You never want your pip snatchers to outperform your hypers, right? Which you've done a great job here from what I can see at a glance. Cool. All right. Yeah, 10 losses. Okay. So it's 41% strike rate. Right. We can go over to the if you could make these ones the grid, if you could grid them all up.
Mhm. Oh,
Uh
here.
yeah, even this, maybe the smaller grid even. It's just because I've got Zoom stuff all over my screen here. Let's go.
Like
Cool.
this?
Yes. Look at the smaller one would be better. Yeah. Okay. Let's go through from maybe first to last of the month. So we're gonna go in. All right, EuroCAD, let's go. I'm gonna call this trade one. We've got quite a few to go through. Low time frame exit. Okay. Everything looks good there. Got the trend, everything looked good. Cool. We look at the daily. Good DDP on its way back to support level. We can see here. I mean, that's not even from what I can see, it's not a very significant support level. It's just a recent high. Um, yeah, price was on its way back. And I bet if you had, I mean, this is when I'd drill down to the lower time frames and have a look at where precisely is
Oh,
that
we're in
that
the wrong
resistance.
thing. We're in the wrong account.
Okay.
I was looking at it, I was like, I don't know why are there so many trades on this chart? It's because it was also filtering in my back tested data.
Oh, I see. Not to worry.
So it's a little bit less. There was like 4 extra trades.
25% strike rate, 3 wins, 9 losses. So you're out. At least we still got that hyper on the books. Your back testing data then outperforms your pip
Yeah,
snatcher.
there was 4 little back tested ones that I had snuck it because I didn't fill out the account.
Trading the Mexican peso, I like it.
It wasn't good. It wasn't a good idea.
Yeah, we'll see. I've banked some good money on the peso. Okay, let's check out this one. Let's go daily first, because there's that one's obviously a bit questionable as it is. Uh, which
It was
day
this
was?
one here. So this
Oh yes,
here, and then this was the day before. So I seen it as it broken out of this
right. Long
wedge,
position.
came back, retested that, and the 1 hour 50 EMA,
Mhm.
and then was on
Nice. DDP is good. I like it.
hourly.
Yeah. Uh, yeah, meets all criteria. Meets all criteria. Um, I know there's going to be some people on the call here that are saying more advanced, saying like, "Oh, is that a quality break and retest?" And that's the only overarching questionable thing here. We'll give you a pass on that one for.
Why would it not be? Because it's because there's lots of space and there's lots of space here, but
Mhm.
then there's this, which is like, oh, that's kind of then a lower low if it's going to reject the 1 hour 50 EMA. Is that what would take it away for you?
For me, and so that one there you can use a little bit of like mental deletion because that's just like a one noise candle price drop down once and it shot straight back to where it was. The major thing here is the consolidation. So if we look at where the first red candle formed, the tiny little doji right after the run. Yep. So where that is, and then move your cursor to where the pullback really begun. Yeah.
Yeah.
Price did nothing for like that's like 20 candles. 20, maybe 15 candles, something like that. So and I've been trying to find again terminology around these things. This is what I'm always trying to, I'm always working on trying to come up with, yeah, these concepts, right? To explain. This is what's made me such a better trader since launching Pro Trader is these concepts. But run, stall, pullback is not that's where things get a little bit hairy. We want run pullback. Quality break and retest. It's a break and a retest. But if it's a break stall retest, that's the problem. So now the definition of what is a stall, I'm yet to be determined. But one argument could be if we were to entertain this idea, if price begins and goes pretty much nowhere for 15 candles, which is what it did here, where the run ended, like we could all agree pretty much where the run ended. It was when those green candles subsided, when they stopped, right, where you had your cursor first. We can all kind of agree there. And then it kind of did a pullback thing and it kind of ran up. But we can just even removing the noise, like if we just had like like I don't know, some kind of like the 2 minute EMA or something on the chart here, or like the 5 minute EMA, we'll see that it kind of runs and it kind of balances out the noise, like the the, the little push down there and then the push up there. That all kind of neutralize that, all kind of balance out. And then really, price just went sideways for 15 candles. It can go sideways for a bit, but how many is too many? Again, yet to be determined. Couldn't tell you. But that's why I'm going to say I don't have any rule against this right now. So it's passable, it's acceptable. But for that, I'll just say market condition is looking subpar. The DDP was very good. I wouldn't say it was excellent, but it was very good, which means that a subpar and a solid to very good DDP, it's a passable position. But just by looking at that break and retest, it's a little bit hairy. And now anybody else who's watching this or who's on the call right now, you'll be thinking, shit, Luke's getting real complicated with this thing. You'll know. Everybody knows what a quality run and pullback looks like. When it's there and it's obvious, it was like yesterday's weekly market forecast. You'll see you guys whoever watched that, you'll see that the before and the I'm like this chart or this chart good, this chart bad. I didn't even explain to you why, but you'll go and you'll see, oh, I see the difference, you know. So that's the only thing. I'm gonna give you three ticks across the board anyway. So the way that I rate each trade here is it a valid setup, right? Did you take the entry accurately, stop loss, profit, target entry, order placement, or how you entered it? And then the final one is management or exit method, which you got ticks across the board for that. I'd just say be a little bit more, uh, if in doubt, stay out is what the old saying goes. And again, I'm not going to mark you down on this one. It's just something to put in the back of your mind. I think there's going to be more critical things that we can address compared to quality break and retest. Okay,
Right.
so here we go. Post rejection. You've identified that there's a level there. Good. But price is not on its way down there. It ran down, it wicked, and it actually formed this sort of semi-low test thing, which is quite aggressive. They rejected off, responded off that quite aggressively, right? So again, it's the same thing that we just spent a little while discussing before. Now, is that exactly where the support level is a question you could be asking. And it's because to the left, there's been some response there. Could we have drawn it down on the very bottom one? Well, then that will exclude the top one. I like where you drew this here because you included, and this is the most conservative drawing here. You could have certainly drawn it further down, but then we're running the risk of confirmation bias there. Uh, yeah, it's that wick there, exactly where you put your cursor. That's like the most extreme place to include all of it. That was the one. So you had already drawn that in. You do have your RSI indicator turned on. I rarely look at RSI these days, and I wouldn't have been so concerned with this. So this is not one for me. But I'd beg the question, it begs the question, like, why have your RSI turned on if you're going to ignore it?
Because I take it into account.
Oh yeah, okay, you
So
do.
see if there was like red and then there was green and then this was the red, then I'd be like, no, because it's showing signs that it was slowing.
Yeah,
But this was red, 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 red,
right.
and
So you
then
got
there was
momentum,
rejection. So I do take it into account, but
right? I can see the pros and cons. So you got big momentum in favor. I love that. So DDP immediately is like you've broken recent lows on the daily time frame. So it's like the uptrend is obviously no longer intact. Got the momentum. It's got the things that are in support, but got to take into account these negatives. RSI aside, I wouldn't have really considered that one too much myself either. But again, I'm being hyper diligent these days. This is why I keep hammering in this milkman already made his delivery. I wish, guys, I came up with a better phrase in the beginning, but that's the one that just stuck, right? It's already hit that level. More often than not, I agree that more often than not, what we see here happening, you would have had another bearish candle. It would have like come down, maybe formed like a descending triangle down to that level, created that support level on a 1 hour, maybe seen a double or triple bottom before price bouncing away from that support level back up again. But not always. That's the thing that it's like we can't always bank on a support level being rejected twice. A support level being rejected once is expected. A support level for price to come back and revisit that support level again, you're kind of playing with fire a little bit, but let's say it does. And then the third rejection of that level, which, sometimes happens. And again, we're talking about descending triangles where price does come back and revisits them a lot. Now you're really just like, that's just now kind of a suicide run. So the chances, for the reason that I said before about the tidal waves, there's a huge tidal wave that carried all of that momentum to the downside that had so much in favor. Why did we get such a big bounce away from it? The size of that wick is not insignificant, right? That gives us information, and that's because that's showing that, okay, all of the bears, or a vast majority, a large sum of the bears that were in that drove price to where it is, took profit at that support level. I'd be very surprised if anybody has taken bullish positions on that, right? Because like it's against so much momentum. So that little pop that you saw there wasn't really bulls. That was mostly just the bears exiting. And then once we saw the cascade of closing of positions, again, all the bears, the tsunami has gone. The next day, equilibrium that we saw. I mean, that was the day that you entered anyway, so we didn't have that data at the time, fair enough. But just telling the story of what happened. Equilibrium, great. Tsunami has gone. Yes, cool. The village is safe. Right. Okay, now it's time to rebuild and let's get the bulls back in here to push price up again. So that's kind of what happened there. So again, the data that you saw at the time was only the big bearish low test, but that wick was not insignificant, is what I'd say. It's showing a lot of bearish, um, like bears exiting. So then it's questions: Are you going to enter Are you going to enter the winning team, or are you going to join the winning team? Because obviously they'll be in the winning team until this point, when all of your top players have all just resigned that year. They've all gone into retirement. You're like, well, I'm not so sure it's the winning team anymore, right? If that's kind of making sense. So Milkman's already made his delivery. Um, well, let's check out the other one. Yeah. Yeah, everything here looks good. But I've made well, actually, know what the heck's going on with your position sizing here?
Yeah, and this is not a good one.
Okay, that one is just a okay. You're unfortunately going to get a cross for that. The
Yeah,
milkman
that's
and the delivery thing, the previous concept, something to be aware of. This one here is just not a pip snatcher.
yeah, I know.
Yeah. I
I
remember
think
you that we have mentioned. I couldn't remember if it was before or after the 1st of August.
oh, it was after, I think. I
Okay.
think it was in August. I have completely different rules now, but I think even with my rules, this is just not right.
Yeah. Cool. So this is good. This is why I went back to the start of August for everybody. It's on. This is almost 2 months ago she took this, right? There's a lot happens in 2 months. But as we progress through this, we're going to see the progress of your journey. Hopefully we don't see any of these in the past week or two. We certainly, hopefully, we will not see any of these in the next 6 weeks during Been Chloe. So the pip snatch is the simultaneous break and retest of the 1 hour 50 MA and the daily pivot line. But you can see here there was the pivot line pivot. You might as well just turn them off. There's no relevance at all to them whatsoever apart from stoppers behind R1. So that one's across anyway. That's the first one. Moving on to trade three.
This one, there is one massive thing wrong with this one, which I didn't see.
This was a long position. Entered on that. I mean, I don't if it's a resistance level, obviously we don't see any historical data there.
No, I don't think it was. I just had it on as a check on this one.
Yes.
But it was more in the hourly, which we'll get to.
Right.
But I was
Daily
happy.
looks good. Looks very good. Mm.
The hourly, I was torn between like, oh, is the rough trend this one, and then this is a lower low, or really is this a high and that's low, and then you've got
Yeah.
higher high, higher low. It's
I'd say at that point, I'm happy with that. I can see that we've got from yeah, where you were just drawing in that run, pullback. The big noise, news, crazy volatility before that big high there. We don't even need to like mental deletion. Not that we would, because that is very significant. But the fact that we've now begun trending again. So it was in an uptrend up until the point, then we saw some big crazy volatility there with that high, which broke our trend when price kind of pulled down again, and then it started forming again. So all we need is 4 points, four kind of swings for it to be a trend again. So if you draw where those four swings are, so the low to high to low. Yeah, so low, well, go to the first low. Low, yeah. Higher low, good. High, higher high, good. So we have already a higher high and a higher low, and that's sufficient for me because we've got at least three candles on the pullback there. But the runs are obviously runs enough. It just skews your perspective when you see, wow, that was a really massive thing here, but you can't always expect runs and pullbacks to be that big. Again, how small is too small, or how big does it need to be? And for me, it's three medium-sized candles, and I see on that pullback there was three medium-sized candles, like neutral. They weren't really tiny. So that's fine. There's nothing wrong with this one, apart from your entry's a bit weird. I'd say after spending 5 hours below the pivot line, it's starting getting a little bit questionable. And yeah, I
it
mean,
looks very much it.
I'd say it's fine. It's that one's I'm happy with that across the board. Wouldn't say it's an epic setup, but it meets criteria to be solid.
I didn't like the 4 hour. That's what was mine. I was like, oh, it's actually clearly lower low.
4 hour, yeah, actually, and then now that you mention that, that is a good point. Good, thank you for bringing that up. As you can see, and bring everybody's attention to where the marker is. This is why it's important to be putting signposts in. See where that signpost is. She entered on as one of the 4 hour, one of the four 1 hour candles within that 4 hour candle, right? Which means that the previous 4 hour candle had formed. It was there. There was data that you could see when you made that call to enter. And that's a pretty bearish 4 hour engulfing candle. You know what I'm talking about?
Yeah.
Yeah.
Yeah. I think I was like, well, this one's it's smaller than this one, and it's closed above the 1 hour 50 EMA. Like it looks like a rejection.
It
So that's
doesn't look like a
nice
rejection.
as
If you think that one looks like a rejection,
this
then
one.
that one from the, what was it, the previous setup, with that support level where we said that wick was not insignificant, then that one's definitely a rejection with the really where it's half that wick. I wouldn't say that's a rejection. So there's two things. So there is no fixed rule, like how a DDP is not quantified by one thing. The With the pip snatcher and many of the strategies, the criteria is the 4 hour against us? The answer has to be no. It doesn't have to be favorable, just has to not be against us. And you did mention already that you didn't really like that there is a clear lower high on the 4 hour, right? We could say, well, market's choppy because it still has a higher low. The higher low is intact. There is a lower high on the 4 hour, so trade off there. But the fact that we have a pretty significant bearish candle, it's not the biggest bearish engulfing candle that there is, but we will see if we just took a glance to all the candles that are on the screen right now, it's in the upper 50th percentile, 50 percentile, right? So it's certainly not an insignificant one. There's not much of a wick on it, so it's not really giving us much sign of a low test. That in conjunction with a lower high on the 4 hour, that's the thing that I'd say is I'd say that is 4 hour against us, you know.
Yeah, fair. Yeah, agree.
Yeah, that's the one there. Yeah. Alka's asking if I can take over the mouse to make it clearer, please. Another banger. But I think you're doing a great job with the mouse. But if we just follow along with it helps me as well so that you can see what I'm you letting me know that I can see what I'm thinking and saying. So this is a long position. Yep, cool. And you entered, so just for everybody's aware, she's entered on the second green candle. So at the time of making this decision, there was only that one. We saw price run down here, got two candles. We got two deceleration candles, one low test, one doji, and then we got a confirmation. So two deceleration plus a confirmation is a really good a good sign, a good, now I want to be careful with this. This is a strong indicator that we are in the running for a good DDP, right? Now, what else have we got? Market conditions looking pretty good. We've got lower highs, lower lows, lower highs, lower lows. I'm deleting out a little noisy, choppy bits. Great. So it is trending nicely. Now, this is obviously a counter trend position, but we want predictable highs and lows, regardless of if we're trending or if we're with the trend or counter trend. We don't want something that's just random and unpredictable. So this is good. The only resistance level that I could see, not what you've drawn here, is all the way to the left of the screen where those lows are. We can see we've got plenty of room up to those lows, and there's nothing else that I can see on the screen apart from these levels that you've drawn in, which you probably drew on the 1 hour anyway. That's a great DDP. I like that. So we can jump down to the 1 hour and we'll see that probably I saw that trend line that you're drawn in. Nice, we've got a supporting trend line there, right? It's not it's not a critical criteria, but it's something that's quite nice to have. Uh, and the kind of resistance level that you'd drawn in there, maybe that was drawn after the fact, or that was just, oh, that was probably an alert level, was it? Just to show that you've hit
This one here.
yeah, like, well, I don't see any data saying that that's a resistance level.
No, this one was to sort of go back and see where
Yeah,
to check if there was more resistance around here.
good.
And
Yeah, so
I
sometimes
tend,
we put them in as placeholders just to be
yeah,
like, is that a level? Yeah, that's the way that I do it as well. We weren't trading beyond recent high. Um, Now the some might say, is that a little wonky? Is it a run pull that hasn't broken those recent lows? I wouldn't really call that one a pullback. Now it was three candles, but we can see two of them are in the lowest 50 percentile, and all three of them are tiny. So yeah, I'd say that this is what we didn't have here was that stalling situation, right? Price ran up, granted did have this little temporary blip right where the cursor is there, continued on to the high, continued on to the high. There we go. For Alka. And then pulled back fairly gracefully. It did have some time where it, kind of just like pulled back slowly. That was over Devil's Hour, though, we can see as we rolled with the new day, where we had those four like doji candles. We get that often. That's fine. Yeah, exactly right there. Pull back, entry there. I would have said you would have been probably better off taking the entry earlier in the day, although you're in Europe,
That
so
was
that's
6
Asia session.
a.m.
Yeah,
That
yeah.
was as early as I can do.
Oh, and you still place an entry order at 6 a.m. Good one. Nice. That's good. And I see that you just used a little bit of discretion here, a little bit of a tactical stop loss clipping.
Yeah.
Because why, everybody? We can see that she didn't want to trade beyond, she still identified that high, the little blip high on the way up there. You didn't want to trade beyond that high. Move your
Yeah.
cursor to where I'm talking about. Yeah, exactly. That one there. So even though that's not really a real high, and certainly you could have, you wouldn't have been marked down if you traded all the way up to that other high. It gave you stop loss a little bit more grace. You could have done that either, but so that's just a preferential thing. And maybe you made the decision as well to see, well, I do have this trend line in play, and there was kind of the support level. So we're still where our stop is, even though we clipped it. We didn't have it all the way down below S1. We've still got that support level protecting it as well. And we can see that logic worked out perfectly. Price pulled back, did hit that level, and then it ran onto a profit target. Obviously, the perfect setup, the trend line would have held stronger, and it did. You can see price did bounce a little bit 1 hour after you entered off the trend line. Trend line, unfortunately, just wasn't quite sufficient enough. Neither was the 1 hour or the pivot line, and then pulled back. Just wanted to hit that support level that you'd already drawn in. Boom, hit profit target. DDP, very good. I'd say this took a little bit of a closer look. I'd say it's it was still solid. There was nothing wrong here. There's no negatives here. The only like preferred thing is if we would have been able to get stop protection behind S1, but you made that discretionary trade-off to not trade beyond those recent highs, and it probably also would have been up to your 4-hour 50, maybe potentially exceeding 4-hour 50, which would have invalidated the setup anyway. So really good use of stop clipping here. And yeah, Epic Daily, good, has solid 1 hour. So setup was valid and trade management and everything's set and forget. So you got ticks across the board. Was 1 point. Right. Yep. So looking very similar setup as the other one. This is the day later. Is it the same currency pair or a different one?
I think was the other one was Swiss, and this
Okay.
is yeah, I think.
Okay. So it was pound, yen, pound, Swiss, I think. Yeah. So very similar here. As we can see, had that deceleration or sword, well, not as quite as clear deceleration, but we had that big low test inside bar. Then we had one bullish pop. Then we had another one that was slightly smaller. Um, but that's fine. Like we're still got plenty of room, and same thing with the resistance level. It would have been like where she's drawn those levels are not relevant on the daily, probably from the 1 hour they got carried up there. But if you move your cursor to where we did last time, to the left of the screen where those recent lows are, or the most historical lows are, yeah, so that's the level that I'd be looking at, thinking, okay, well, we got a clean run at least up to there. And again, for the people that are asking, well, and is price going to reach there today? Probably not. Maybe it'll take 2 or 3 days to reach there, but we've got a clean run for the next 2 to 3 days, which is helpful for our DDP. I don't, you know, so that's good. It's good. I like this. We did get a slightly smaller candle, so it's sort of decelerating. Okay, this is where it gets a little bit dicey here. Mm, that MACD, you're going pretty. He's taken up quite the screen size there.
Yeah.
You can't move him now. Can you pinch to zoom in a little bit? Yeah, cool. There you go. So you got your parallel channel. I see that you're kind of targeting there. I would say this is looking quite toppy now, right? So this is where quality break and retest, entry price. So your placement was good. So, the second tick is a tick. Um, but so right on the pivot line, stop loss, slightly stop clipped, profit target. Where you place your profit target, the logic there is, okay, well, we're seeing some resistance at this level here, so we don't want to trade beyond that, and that's kind of around where recent highs are. The question is, has the milkman already made his delivery? That's kind of what we're asking here, right? Is it a relevant resistance level? And yes, it is, because we can see historically, like going back to the middle of the screen there, those rejections, we saw 1, 2, if we made it a zone and we like included those the other ones, it's almost three rejections there. So this is a level that is relevant and significant. Yes, exactly where you put your cursor now, that was going to be a uh, that is going to be where we're going to get another. Well, that's where we did get another rejection, right? Even though it didn't reject it aggressively. From there, price did nothing. It went up, down, up, down, up, down, up, down. It was flirting. It was dancing around that level. It wasn't a clean rejection of that level until it came back to where you draw the little gray box there, a little gray. Oh no, whatever that is, just to the left of
Oh,
your
yeah.
purple. Yeah. So then
That's
price is now back at that level again. Okay, we can see that. And that was where the milkman kind of made his delivery. If you went down to like the 15-minute time frame, just if everybody wants to visualize that, that kind of it did dip above that resistance level, but then it came back down, do a break and a retest back to it, and then traded down to your resistance level. So this is where, I know you guys might be asking, how relevant is that then? Like, this is all stuff that's happening well before her entry. We entered and price chopped around for a while. Yeah, why did we see so much indecision? See how as soon as your entry triggered, price did bloody nothing for 5, 6, 8 candles, and then you were just like, that's it. I'm gonna exit here.
was Friday night. It was a Devil's Hour Friday night. I'm sure
Yeah,
on this one Monday morning it shot up, so I'm sure I remember having a bit of sadness about that.
yeah.
But
Maybe it did, but the thing is, why did it do nothing for 8 hours? And that's because, I mean, granted, Friday night, you got 8 hours before candle close, but it's just not one that has a strong, there's no gusto to it, right? We've got a level there. Is that, I mean, the level has been rejected. You've drawn it in as a level. So the milkman's already made his delivery. Now there is there is reason to say, well, maybe it wasn't that well respected because it did dip a little bit above it, but uh, it's there was indecision. Now you had the trend line, so you had the trend line, the pivot line, the 50 MA. Those were all good. That's reason for the bulls to enter, the reason you entered, right? But then you've also got that resistance level, and then you've got they've already sold off there. When you don't see a very clear, obvious bias, right? The why Even if the best outcome is that you still were to bank profit on this, many trades, if many of you are finding that you enter a position and you're sitting in it and it's flapping around for like a day or two, it's because there wasn't even if it goes on to hit profit target, it means that there just wasn't enough support in favor of your of that trade. It's kind of like being a politician, right? I suppose it's like if you're running for, you're getting votes. It's trading is all just about votes, right? I think it's going to go up. People think it's going to go down. Whoever gets the most votes wins. So the bulls here, this is where it was so closely tied. There's a lot to say about the negatives of this not being a great position to enter. And then there's also some reasons for the reasons that in our specific trading strategy saying that there is reasons to enter, but there's reasons to enter not without negatives. And that's one that, probably would have been worth staying out of. It's not awful. I mean, I'm still going to say, because I want to start getting a little bit stricter on you. So I'm going to say avoid that one for the reason resistance level already rejected. You're entering post rejection. So we're going to start using this terminology, entering a setup post rejection. If it was on its way to rejecting it, that's fine. But let's say this one is looking very post rejection-y. That doesn't change your performance at all because what was the net outcome of this trade? It was
like up something, up 0.38, I think.
okay, maybe let's
Yeah,
see.
0.38.
0.38 was it? Okay.
Yeah.
So we're going to take that one off your final result.
How I kind of seen it was like this was not a double top because price closed above the wicks of this. And then I seen it as like complex pullback, like down to here.
Hmm.
But I see with if that level then it did come to reject that within the complex pullback that I seen.
Okay. If that's a complex pullback and you can see where you put the A B correction, so like where the gray box is,
Yeah.
if so put your cursor right on where the gray was, the B. So if you're seeing this as a complex pullback, then that is the right shoulder of a head and shoulders, and then the left shoulder is there.
Hmm.
I don't really see it quite as this, but this is your thesis, then that's what would have happened. That is a head and shoulders, and that's a very bearish price action. We never want to trade a bullish position post um a yeah, a head and shoulders.
I'm just asking because I really want to understand. How
Yeah.
can this be head and shoulders if a head and shoulders is a swing and a swing is a minimum two engulfing candles or three solid candles? Then I would just see this as a shimmy.
Exactly. I wouldn't consider it. That's what I said.
Oh,
Because
okay.
that is just like a little shimmy. The whole
Mhm.
thing is, to me, that's a run up to that level, consolidation, price stalling, flapping. Like I wouldn't consider that a complex
Okay,
pullback
that
either.
one. Okay.
Um, because complex, it's done two bearish and then a bullish, two bearish, then two bullish. Like, that's just, this is somebody who's asking about consolidation versus what's the difference between a ranging market and a consolidation. This is consolidation. This is,
Okay.
or even perfect to going back to our very first example. Look at where the run up to the rejection first occurred. We're just in that same phase. Yep.
Yeah.
So right there. Now look at where the real pullback begun. Move your cursor to there.
Yeah. It's the exact same level.
Price
Yeah.
did bugger
Okay.
all for 15 candles. That's
And
kind of the
then,
thing that we yeah. And there's a little bit of noise either side, like it did. Uh,
yeah.
these are the ones that we've got to be wary of. So was it a quality break and retest? I'd say no. Was it a break and retest? Like run up and pull back? Yeah, it was. Was it quality? Is no. And then if that's where it, the ran begun, and oh sorry, that's where the phase began and that's where the phase ended. Yeah, there to there. Where is that? Right on a resistance level, which is the same as the previous one. And price is already there's a few reasons as to why. There's maybe just three reasons. Because if that's where the high is, then it's a double top, considering the previous one
Yeah.
on the trend line, and also the uh, the milkman's already made his delivery. We're
Okay.
entering post rejection of that level, so it just feels this trade feels a little bit clasping at straws to me. If anybody else is on the call thinking, "Fucking hell, Luke's doing some real analysis on this one," I don't know if I'm keeping up with all these different concepts. It's because the easiest trades, the most simple trades, the ones where none of this you need to even consider, like beauty, break and retest, beauty, daily direction prediction, we're laughing, right? Where things get complicated are the reasons why certain trades are excluded, right? Not the reasons why. If this is a textbook epic trade, I'll be like, everything was good. And we went through a couple of them that were like pretty good. And I was like, yep, yep, and yep. Like trading well is actually easy. Avoiding trading bad is where it gets complicated. Like almost anybody on the call here knows how to take a good trade, right? It's the dance of learning to not take shit trades. Is the that's the dance. That's the subtle art. Cool. That's trade. Oh yeah, that was trade five. Right. That is all we got time for today, ladies and gents. So let's go ahead and if you don't mind, stop screen recording. Thank you all, everybody, for showing up, and thank you again, Chloe, for your involvement in this program. I'm hoping everybody is enjoying it. With helping Chloe, session 2 out of the way. Session 3, we're going to be doing much more of what we've been doing now, even more high paced. So we're at trade number 5, and then we're going to just progress all the way through up to where we are today. And hopefully we're going to see, well, I'm sure we're going to see developments and progress and so on. Chloe, keep doing your thing, keep trading, keep placing trades because we'd love to see your performance as well from the beginning of helping going through all the way to the end. That's going to lead us graciously into daily power hour, which is going to be good. Carry us all the way through to there. Thank you, everybody. If you guys have been having a good time, please tap something in the chat. Give Chloe your support. If you're watching this on YouTube, type comments below. Give Chloe some support. And thank you all, everybody, for showing up and watching this live. Rasa's awesome sessions again. Thanks so much. Whoop, whoop. Thanks, Chloe. Thanks, Chloe. Good, good, good. All right. Peace and love, everybody. Chat to you all soon. Enjoy the rest of your week. Bye for now. Thank you, Chloe.